commodity and the currency space, Manisha Gupta joins in with a roundup. Manisha, today at least seems to be a bit of a risk-on day, even at the commodity end.
Well, it sure is, yes. And what's really running up today has been the metal space. Take a look at the nickel prices, up nearly 5% today. And that majorly is because the coal prices have been running up as well, 10% upside on that one. Remember, the coal prices have gained 220% now in 2016. And that pretty much has been the reason that you have seen everything from ferrous to non-ferrous actually jump up. It's not just nickel, but the zinc prices are trading at a fresh 52-week highs as well. And copper prices, which have been a laggard, is also trading up at nearly 8-month highs. We've seen more than a percentage point gain come in for the copper prices also. The steel prices are trading nearly 2.5% on the higher side. So everything in metals prices is trading in the positive. Not just positive, it actually has been running up. The crude oil prices, after 3 weeks of decline, have seen this week start on a positive note. So more than 1% of gain there as well. There have been statements from the Algiers minister saying that whatever was discussed in Algeria meeting by the OPEC and non-OPEC members will be kept on, as in the word would be kept on, and you would see an output cut coming in on 30th of November. That is what has taken those prices as well on the higher side. While it is the risk appetite which is on the higher side, you have seen the gold and silver prices actually decline. So nearly a percentage point of a decline is how we are trading onto that one. But just a day away from the U.S. presidential elections, the volume, especially in commodities and currencies, have trickled down a bit. And we have a couple of scenarios laid out for you on how these asset classes perhaps may react depending on who is the next U.S. president. So scenario one is the potential election outcome in case Trump becomes president and Clinton accepts defeat. In that case, the winners, of course, would be those safe havens. So you will have the euro, Swiss franc, Japanese yen and gold prices gain up. This, of course, is a knee-jerk reaction that the markets could watch out onto that one. The big losers, of course, in that case could be the US dollar and the Mexican peso. Remember, that one really has been bouncing all over the place depending on where the poll numbers have been going in. The second, of course, is if the Clinton becomes president and Trump accepts defeat. In that case, it would be a continuing of stability there. You will see the US dollar gain up and you will also see the peso gain up as well. Japanese yen, Swiss franc and to some degree euro can actually see a decline. Chinese yuan may see a decline, and many of the exporter emerging market currencies actually could see a bit of a pressure coming in as well. That is what the markets are analyzing right now. Scenario three, of course, is that Trump and Clinton, one of those, become president by a very narrow margin. The loser refuses to accept defeat is what the markets are working with. And that is what seems like a very likely scenario at this point in time, going by the polls and the kind of statements that both the candidates have been giving. In that case, uncertainty would be definitely negative for the markets. And you will see a knee-jerk reaction coming in for the markets. Even a bit of a risk aversion is what you would see investors preparing themselves in the markets there.